Hey, Jonathan York from Bay Financial Partners, looking at the investment markets. Nearly towards the end of October now, which traditionally has been a pretty sort of volatile and sort of weak month for stocks. But that hasn't quite been the case this year for 2019. Now that certainly hasn't been the case in the US. Really on the back of much better earnings on the whole have really pushed these markets to record highs. And that coupled with sort of investors that are really overly pessimistic, really always looking for the next sort of worry, whether it's a trade deal or the economy slowing, earnings not being quite as strong as sort of anticipated. Really was a sort of wall of worry and sort of overly pessimistic investors out there. And if you look at it slowly, sort of one by one, they're sort of being ticked off. I mean, okay, the US-China trade deal, is nowhere near completed, but apparently we got a sort of a partial agreement on phase one, so that's sort of ticked that box and looking to move forward. Certainly, the US economy is still pretty strong. You've got record low unemployment, and then earnings come out really, which were quite a bit better than anticipated, sort of on the whole across the board. Now it's just going to be interesting to see whether we do see a further Fed cut. Certainly going to be quite interesting, really, to see if we do, because certainly the economy has slowed a little bit. But as I say, you still got reasonable growth going forward. You've got record low unemployment, and it'll just be very interesting to see if the Fed do still come through with a quarter-point cut. So it'll just be interesting, there's certainly quite a bit of money sitting on the sidelines, and whether that will get invested before year end. And also as well, obviously President Trump's still facing the sort of impeachment inquiry. He's sort of ranting and raving at every time someone has to testify before before Congress, and it's really going to be interesting to see how this sort of plays through. Certainly, obviously, the Democrats have the numbers in the House, but they don't have the numbers in the Senate. So, I suspect it will be a little bit of a stalemate in the end. And all this comes on the back of Mick Mulvaney coming out and saying, well, actually, most calls are sort of quid pro quo out there, which was a direct conflict and contradiction to what the president has said. In the UK, Brexit has sort of rumbled on, and they've got a further extension, which really went against everything that Boris Johnson had come out and said. Apparently, I think his famous quote was, "He's going to be left dying in a ditch than ask for an extension." But he had to sort of go cap in hand and sort of eat some humble pie and ask for the extension. That's been granted till the 31st of January. But probably more importantly is it looks like he's finally going to get his wish to have a general election. That'll be more than likely in December. And I say it'll just be interesting to see how the two parties campaign and really how the British public sort of view the sort of policies put forward. If Labour do campaign on the sort of a second referendum, If a second referendum was held tomorrow in the UK, I think the vote would be to stay in the EU. But then the flip side of that could be that really the British public probably don't want a Labour government. Certainly Jeremy Corbyn is probably less popular than Boris Johnson. Still encouraging signs for the Australian housing market, which looks like it's sort of dragging through a little bit of consumer confidence, sort of a pickup. That'll be interesting to see how that sort of plays through going into the Christmas spending period, and whether the sort of public do feel a little bit more confident about things. Here in New Zealand, quite a bit of talk about KiwiSaver and potential possible changes. There has been some talk about increasing government contribution out there, and was the old sort of member tax credit. It's now called a government contribution. Just trying to sort of encourage more sort of self-employed people out there to sort of get into KiwiSaver, because obviously they don't benefit from the employer contribution. And some of the numbers being talked about is as much as sort of a $2,000 contribution from the government each year, which obviously make a pretty big difference out there. New Zealand economy not doing too badly. Obviously it's going to be interesting to see how the government look to put some of that surplus to work. $7.5 billion was much more than anticipated, and it'll just be interesting as we go into the election year 2020, see what they sort of come up with in terms of the sort of spending plans for that for those funds. Here in New Zealand, still record low interest rates. Certainly investors are struggling a little bit, certainly on those sort of term deposits, below 3% now. And if you are looking for alternatives out there for income, of course on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.